Let's analyze crypto market cycle.
Imagine it is late at night. The room is quiet. The only light comes from your screen. The chart in front of you is bleeding red. Another candle drops. Another support level breaks. Social media is silent. No rocket emojis. No bold predictions. No influencers promising life-changing gains. Just silence. And yet somewhere in the world, someone is buying. Not because it feels good. Not because it feels safe. But because they understand something most people do not. They understand the cycle. The crypto market does not move randomly. It moves in waves. Waves of belief. Waves of greed. Waves of fear. Waves of opportunity. Every major move you have ever seen follows a pattern. And once you truly understand that pattern, you stop reacting emotionally and start positioning strategically. Let me tell you a story. There was a time when the market felt unstoppable. Prices were climbing every week. Portfolios were doubling in what felt like days. Everyone suddenly became a genius. Screenshots of profits flooded timelines. Friends who had never mentioned investing were now giving advice. Strangers were predicting unimaginable price targets. It felt different. It felt permanent. It felt like the beginning of something that would never end. That was the markup phase. Markup begins quietly. At first, only a few notice. Price starts climbing slowly. Confidence returns gradually. Then momentum builds. The media starts paying attention. More people enter. Capital flows in. Each new buyer pushes price higher. Each new high attracts even more buyers. It becomes a powerful loop. The higher price climbs, the safer it feels. But that feeling is deceptive. Because while excitement spreads across social media, another group is moving differently. Early investors. Patient investors. The ones who accumulated when nobody cared. They are not celebrating loudly. They are not predicting the moon. They are slowly selling into strength. This phase is called distribution. Distribution does not look scary. It often looks strong. Price may move sideways near highs. It may even push slightly higher. But underneath the surface, supply is increasing. Smart money is reducing exposure while the crowd increases it. Then the shift happens. A large red candle appears. At first it is dismissed as healthy. A normal correction. A buying opportunity. But another drop follows. And another. Suddenly confidence weakens. Influencers change their tone. Headlines shift from excitement to concern. Optimism turns into anxiety. Anxiety turns into fear. This is markdown. Markdown is sharp. Fast. Emotional. Support levels break. Panic spreads. Late buyers begin selling. Many promise themselves they will exit when price recovers. But price does not recover quickly. It continues falling. The same market that felt safe at the top now feels terrifying. And that is where the real opportunity quietly begins. Welcome to accumulation. Accumulation is not exciting. It is not viral. It is not dramatic. It is quiet. Price moves sideways for weeks. Sometimes months. Volatility shrinks. Interest fades. Most people lose patience and move on to something else. But beneath that silence, something powerful is happening. Strong hands are building positions. Developers continue building products. Communities that truly believe remain active. Weak conviction leaves. Long-term vision stays. This is where wealth transfers. The crypto market cycle is not just about price movement. It is about human psychology. It follows the same emotional pattern again and again. Disbelief. Hope. Optimism. excitement, euphoria, anxiety, denial, fear, panic, capitulation, depression, then disbelief again. Technology changes. Projects change. Narratives evolve. But human emotion never changes. That is why cycles repeat with incredible consistency. Imagine two investors living through the exact same market. The first investor buys during euphoria. The headlines are positive. Everyone agrees it will go higher. It feels safe because the crowd validates the decision. When price drops slightly, they hold confidently. When it drops more, they grow nervous. When it drops heavily, fear takes control. Eventually they sell near the bottom, exhausted and frustrated. The second investor behaves differently. They study long-term charts. They understand that deep corrections are part of the structure. They accumulate slowly during fear. They position early during the beginning of markup. When excitement returns and price goes parabolic, they scale out gradually. Same market. Different mindset. Completely different outcome. The biggest gains in crypto history did not happen during comfort. They happened during uncertainty. Early markup feels risky because it does not yet feel confirmed. Accumulation feels boring because it lacks excitement. But those are the phases where exponential growth begins. By the time mainstream media is aggressively covering a project, much of the upside has already happened. The cycle rewards patience. It punishes emotional reaction. When you understand this, you begin to ask a different question. Instead of asking, what will happen next, you ask, where are we now? Are we early in accumulation? Are we in strong markup? Are we approaching distribution? Are we deep in markdown? That question matters more than predictions. There is also a bigger layer to this story. There is a macro cycle and there are micro cycles within it. Capital does not move randomly. It rotates. It flows from one narrative to another. It flows from larger assets to smaller ones. It flows from safety to speculation and back again. Early in a bull phase, investors move toward assets that feel strong and established. As confidence grows, they move further out on the risk curve. That is when smaller projects often experience explosive growth. But when uncertainty returns, capital retreats to safety. Understanding this rotation allows you to anticipate instead of chase. The market is not chaos. It is rhythm. Every surge contains the seed of correction. Every crash contains the seed of recovery. What feels permanent in the moment rarely is. Look at any long-term chart. The crashes that felt catastrophic at the time now look like temporary dips. The rallies that felt infinite now look like spikes within a larger structure. Perspective changes everything. Most regret in crypto does not come from losing money. It comes from misunderstanding timing. Buying too late. Selling too early. Or doing both repeatedly. When you understand the cycle, red candles stop feeling like personal attacks. Green candles stop feeling like guaranteed victory. You detach from emotion and observe structure. You recognize that fear creates opportunity. You recognize that greed creates risk. The crowd always feels smartest near the top. The crowd always feels most hopeless near the bottom. Acting opposite to collective emotion requires discipline. It requires patience. It requires vision beyond the present moment. Cycle mastery is not about predicting exact tops or bottoms. It is about recognizing environments. It is about adjusting behavior to match phase. In accumulation, you build. In markup, you ride momentum carefully. In distribution, you reduce risk gradually. In markdown, you protect capital and prepare. And then the cycle begins again. The next time the market feels unstoppable, pause and ask yourself if excitement has reached its peak. The next time the market feels broken, pause and ask yourself if opportunity is quietly forming. Because the answer to that question may define your future results. The crypto market cycle is not your enemy. It is your map. Once you learn to read it, you stop chasing noise and start following structure. The chart may still glow in the dark room. Candles may still move up and down. Headlines will still change. But your reaction will be different. Because now you understand the rhythm behind the movement. If this changed the way you see the market, then do not let this be just another video you watch and forget. Take a moment right now and ask yourself where we are in the cycle. Are we early? Are we late? Or are we reacting instead of thinking? If you want more deep breakdowns like this, subscribe to Crypto Palace and turn on notifications so you never miss the next analysis. Like this video if it gave you clarity. Comment below and tell me where you think we are in the cycle right now. And most importantly, stop following the noise. Start following the structure. Because in crypto, the ones who understand the cycle do not chase the market. They position before it moves. I will see you in the next one. And once you understand the rhythm, you move differently. You think differently. You invest differently. And that difference changes everything.